I mean, it's been a really difficult couple of weeks for everyone, but I hope you're all well and getting used to working from home. I mean, there's been a huge amount of information coming thick and fast from the government and HMRC around how they can support businesses during this time. So what we've done is we've pulled together a panel of experts on all these different areas of support who are able to answer any specific questions that you have. We have Tim Stovold, one of our tax partners, Ian Robert, one of our insolvency partners, Paul Winterflood, one of our corporate finance directors, and Amy Cretton, one of our HR consultants. And over the next hour, what we'll do is we'll discuss the support that's available to you, focusing particularly really on the more recent announcements and clarifications that have come out. And we'll cover the answers to the questions that we're most frequently getting asked by our clients and by our sort of media and marketing services clients and contacts. We've had a couple of advanced questions, but please use the chat box, which should be down there on the menu bar to the right, if you want to submit some more questions during the course of the next hour, and we'll seek to weave those in as well. So one of the advanced questions that we had was around the level of transparency of sort of communication with employees on the actual commercial position of the company. I think it's a tricky one, but generally speaking, I think that effective communication with employees is vital at this time, and the more transparent that you can be with them about the effect that it's having on your business, the better. Because if you aren't communicating with people, the trouble is that they might assume an even worse position than the reality, and obviously that's not going to be good. And I think also being transparent will also help you with agreeing some of these voluntary arrangements around furloughing or short-time working or holiday arrangements, because if they sort of more fully appreciate what the business is going through, then they're much more likely to want to all sort of pull together as a team to help the business get through it. I mean, clearly there is a balance to be struck though, and you don't want to unsettle people. But I think the key is that the communication is clear, that it's frequent, and that you're showing really good leadership skills. And I think all of that is really vital to make sure that you're keeping your team reassured and engaged and motivated through what is a pretty difficult time for them if they're working from home, and particularly if they're people on their own as well and having very limited engagement. And having lots of things like team chats and webinars during this time is really, really important, and we're certainly as a business trying to do lots of that. But I think this communication also extends to your clients and suppliers as well. Because of course this will help you with your detailed cash flow forecast that I hope all of you are doing and reviewing on a really regular basis. And by regular basis, I mean, more than just every week, probably every day, every other day. So you need to make sure that you're proactively engaging with your clients about the situation and understanding how it's affecting their business, how that's going to affect work streams coming in and their ability to pay for those work streams as well. And when are they likely to be able to actually settle those invoices? Are there clients who are slightly less affected by all of this that maybe can actually pay you on more favourable terms or pay you up front? And also think about your billing process as well, and how you can speed that up and what contingency plans you might have in place if somebody who's integral to that process falls ill. Do you have somebody else that's able to raise bills and get them out of the door? And also thinking about your client system for approving those invoices, is that still running efficiently? Similarly, you need to think about talking to your suppliers as well, to explain to them how your business has been affected and to discuss whether your payments to them might need longer credit terms. I think generally the more open you are with them and the earlier you engage with them, the more supportive they are likely to be. I think never before has the mantra cash is king been so important, really. So you need to be constantly reviewing your cash flows, identify where those crunch points are, and make sure that you plan ahead early to cater for those crunch points, because some of these government supports, like the business loans that are out there, they take time to put in place. They're not instantaneous, so you're going to need quite a bit of lead time to know when those crunch points are. So getting into the detail now, I mean, talking of cash, Tim, we've now got some clarification, haven't we, around how the process for claiming these grants of furloughed employees will work. So tell us a bit more about that.
I mean, there's probably a bit of assumed knowledge here on people having understood what the furlough scheme is. So the furlough scheme, your employees who are furloughed can't work. some of the people on this call may be furloughed themselves, probably shouldn't be on the call if they are, but or may have furloughed your employees and will be waiting to receive the grant from government. We had on Saturday or Sunday, so the government are working weekends, some more guidance released, and even today one of my colleagues has said we've had even more today. I'm waiting for confirmation. So it looks like the date on which the revenue are targeting their system to go live to make the claims is the 20th of April. That I had a colleague mention that date to me today, and I've asked her to send me through the background for that. I haven't had it confirmed, but she said that's come out from the revenue, 20th of April. Now, in order to be in a position to make the claim via whatever online portal the revenue launch, the employer making the claim must, of course, have all the details, must know the employees they've furloughed, the dates they've been furloughed from, the salary cost, all of that. So we'll just assume that within your payroll records you've got all of that. The hurdle we think that's going to trip up a lot of employers is to get access to the portal to make the claim, the employer must be registered for HMRC's online PAYE services. Now, some employers will be registered for that, some will not. If you use an external payroll bureau, or an external provider to process your payroll, it is very likely that you're not registered for PAYE online services, because this is a portal the employer uses to download tax codes and do all sorts of things that you've actually outsourced to somebody else. Well, we provide outsourced payroll and we don't use PAYE online services, and nor, as far as I know, do any other payroll providers, because we've got a different system through which we communicate with the revenue. Now, PAYE online services is, on the face of it, quite simple to apply for. We've got in our coronavirus hub, and Esther no doubt will direct you to that towards the end of the seminar, we've put up a guide on how you actually register for it. But the big problem with registering for online services for PAYE is, as part of the revenue's obsession with security, and rightly so, in order to register, once you've completed the online aspect, they send you in the post an activation code, which you've got to then enter when you receive it in order to activate your account. That activation code is going to go to the address where your PAYE scheme is registered. And if you're anything like us, that's an address that you're not attending at the moment. That's your business address. So to actually register for online services, you've got this rather difficult quandary as to how you actually get your activation code. The guide we've put up on our system talks you through that. So there's a phone call you have to make to the revenue first. You've got to then change your correspondence address. You've got to go through security to do that. You've got to allow a few days for that to update. You've then got to complete the online process. Then you've got to wait for the activation code to come in the post to you, along with another 1 million or so employers who are trying to do the same thing. The revenue in the good days say that takes 10 days, but I think that's a bit wildly optimistic right now. So even though the system might go live in 12 days, if the 20th of April date is to be believed, if you're not registered for online services, you really need to get on and do that now.
And what about directors, whether they can be furloughed? Because I know there's been a lot of talk around that, and some clarification has finally come out on that, hasn't it?
Yeah, so the concern was all of the original guidance and all the original press releases all referred to employees, and us, along with many other bodies, were saying, what about directors, to which the government were being studiously quiet about. The guidance over the weekends finally confirmed that directors, along with a few other unusual categories of people, so salaried members of partnerships and that sort of thing, but ignore those for the moment, directors can be furloughed. The same rules apply for directors who are furloughed. They can do nothing whilst they are furloughed. They can't continue to authorise the payroll or the payment run of the bank or do anything like that, because that's providing a service back to their employer in this sense. But they can, a director has fiduciary responsibilities to do things like, I don't know, file the accounts and sign things which are part of their Companies Act fiduciary duties. And the minimum level of that can still be done by a director. If you're a business with a single director, the chances are that director can't be furloughed, because there are going to be too many continuing obligations on that director to actually be furloughed. And I'm talking about a business with employees. If you're a business, a personal service company with a single director and that's it, you can be furloughed, but you're effectively saying you're packing up for the time being and not doing any work as a business whilst the single director is furloughed. But in principle, nothing to stop a director being furloughed, provided they can do nothing whilst they are furloughed.
Thanks, Tim. I mean, you alluded earlier, sort of joked about people who are furloughed perhaps not being able to be on this webinar. In all seriousness, generally speaking, what can employees do whilst they're furloughed?
The guidance is still pretty pitiful on that. So the exact words in the guidance. So the individuals furloughed can't provide any service back to their employer and can't directly or indirectly generate any income for their employer. So that's what you can't do. What you can do is training and voluntary work. And I think the voluntary work, not voluntarily providing services back to your employer, but voluntary work in a charitable sense. I suppose, my comment earlier about not attending this, you could of course badge this as training as a bit of CPD, which it is. It's very relevant now to running a business, but it is a bit of training. So strictly, if you are furloughed, you probably can stick around. The training, I suppose that there's a little wrinkle on the training, in so much as if the salary you're paying your furloughed employees goes below the national minimum wage or national living wage, the minimum amount you must pay workers carrying out a service, that's okay, because furloughed workers aren't working. Amy will correct me on some of my language here, but if you're obliging your employees to carry out training, they regain their entitlement to national minimum wage. So you just for your furloughed employees, probably just do a quick national minimum wage check, and if you're requiring them to do training, you might just need to check whether they need to be topped up.
Okay, great. And just to clarify, Tim, because I think some people are a little unclear as to exactly what the grant is going to get them in terms of pension and employers' NI contributions. Can you just talk a little bit about the detail there?
Yeah, and it probably the key date in all of this is the 28th of February, and for some reason the Chancellor didn't spot it was a leap year. So the 28th of February, start with the salary on that date, and I'm starting with the simple case where an employee is on a fixed salary, not on a variable salary, like for instance a 0 hours contract might be completely variable. But let's assume we've got a normal employee on a normal salary, it's the same month on month. Start with their salary on the 28th of February. It doesn't matter whether before they've been furloughed that salary changed after the 28th of February, because 28th of February is our reference point. Multiply that salary by 80%, and if that figure is greater than £2,500, the figure to start with is 2,500. If it's less than 2,500, it will be that figure. So if an employer was earning £1,000 and you multiply it by 80%, £800 is the figure you start with. That's the amount that you must pay your employee as gross salary, or the minimum amount you must pay your employee as gross salary through the payroll, subject to all the normal tax deductions, pension deductions, salary sacrifices they've got in place, all that sort of thing. And then when you claim the grant will be for the amount you've paid the employee, the gross amount, plus the associated employer's national insurance, plus the minimum auto-enrollment pension contribution, if that contribution is being made. If the employee has opted out of the pension scheme, then you're not making the employer's pension contribution, so you won't be claiming that as part of your grant.
Mm-hmm. And what about if we go on to make them redundant following furloughing them? Is there a clawback of this grant? Or do we
I mean, the revenues guidance, the tone of it toughened up as each different iteration was released, and probably halfway through the process, they started to include lines in there like we will be auditing these grants, and any erroneous or fraudulent claims will be clawed back. But it is only erroneous or claims made in error or fraudulent claims that are going to get clawed back. If you furlough somebody and subsequently make them redundant, then the furloughing, as long as it was done properly, wasn't done in error, or the claim isn't calculated in error, so there's no clawback.
Yeah. And can you just talk a little bit about the minimum period for which you can furlough people and whether we can take them in and out?
Yeah, so the minimum period that somebody can be furloughed, if you want to be entitled to the grant, is 3 weeks. You can furlough somebody for 1 week, and let's say a bit of business walks through the front door and you suddenly need all your employees back in the business. That's fine. Bring them back in the business. You furlough them for 1 day if you want. But if the continuous period of an employee being furloughed is less than 3 weeks, when you put their details into the online portal later on, it will just reject the claim for the grant because you've failed to meet the minimum furloughing period. Let's say you furlough somebody for 3 weeks and bring them back into the business 3 weeks and 1 day later, the guidance released over the weekend confirmed that they can have a second period of being furloughed. This was referred very much at the beginning as a firm of lawyers, so I won't name who coined this phrase, but I've stolen it for myself. But flip-flop furloughing. So the flip-flop furloughing is there to deal with the situation where you've got work for your employee but only for half the time. So if you had only work for your employee for half the time, you'd furlough them for 3 weeks. You'd bring them back in the business for 3 weeks, and then you'd furlough them again for 3 weeks, and that would continue on for as long as the furlough scheme was in existence. So that's the only way in which you can have an employee working part-time. It's actually a period of furloughing followed by a period of not furloughing. You can't furlough somebody Monday, Tuesday, and bring them back in the business Wednesday, Thursday, Friday. That isn't going to qualify you for the grant.
Okay. And I mean, you talked about the date of the portal being open, but realistically, when a business is actually going to see the cash coming in from the government on this?
Well, let's assume that the bit of gossip that we've heard today from government that the 20th of April is the correct date for the portal being open. At that point, the figures will be uploaded into the Revenue's great big supercomputer. The indications are that those records will then be checked against the payroll, and that hopefully will all be automated. We won't have any manual intervention there. So given that people can be furloughed strictly from the 1st of March, although that backdating is a bit of a nonsense, we might come on to that in a moment, but strictly people can be furloughed from the 1st of March. You can make a claim once every 3 weeks. You're supposed to claim only in relation to payrolls that have already been run or are imminently going to be run. So I think if you're claiming on the 20th of April, you're probably only claiming for the month of March. I'm not sure you'll be able to get your April numbers in there yet. And then, you know, the revenue are under huge pressure from government to get the cash flowing. If the portal is live on the 20th of April, I suppose it's realistic the money might flow by the end of the month. But I mean, really, early May probably feels a bit more realistic. And then if there's a decision, if you are making a claim when the portal's open, firstly, you're going to suffer all the bugs in the system because you'll be sort of beta testing it for the revenue. And also you can only make a claim once every 3 weeks, and you may prefer to wait for your April payroll to be run and then make the claim for the April salaries as well. So that might mean waiting another 5-6 days, depending on what your April pay date is.
Yeah, that makes sense. And realistically, Tim, do you think the furlough scheme is likely to be extended beyond the 31st of May?
Well, Amy will come in on this as well. So we've been attending a number of the CBI briefings, and the CBI, the Confederation of British Industries, have a reasonably good hotline into government, and this date of the 18th of April is being talked about as being the cut-off date where the government are going to need to either announce that the furlough scheme finishes on the 31st of May, which is the current hard-coded date in for the end of it, or whether it's going to be extended. The reason for the 18th of April being the critical date is if you're a large company that's about to commence mass redundancy consultations, the consultation period needs to start on the 18th of April in order to make everybody redundant on the 31st of May. Amy will correct me on that, but the 18th of May is the tipping point. So if it's going to be extended, it's the 8th today. I think we'll probably find that out in 10 days' time or so, because what the government won't want is a load of larger employers doing mass redundancy consultations, because the whole point of this is it's a jobs retention scheme. And the longer they can extend the furloughing scheme, the longer they can put off the mass redundancy consultations that would otherwise happen.
Somebody's asked a specific question here around the fact that most employers will have paid their employees already for March. So isn't it difficult to claim for that month, i.e. from the 1st of March? But I mean, the critical date really is the date that you furloughed people, isn't it? That you've officially furloughed them.
So the furloughing scheme was announced on 18th of March, something like that, 17th or 18th of March, and it was announced and backdated to the 1st of March. Well, okay, that's great that it's been announced as backdated to the 1st of March, but between the 1st of March and the date the scheme was announced, no one knew. I didn't even know what the word furlough meant, let alone there'll be any benefit in furloughing employees. Now, in talking to a number of my clients had accidentally furloughed employees those working in industries where, since the sort of the coronavirus crisis started, their employees quite literally were prevented from doing any work because the nature of their work meant they could only do it on sites that were no longer accessible to them. So, some employers will have accidentally furloughed employees without knowing they needed to do so, and will be making a furlough claim from the 1st of March. But if you were just sending people home and saying, look, you can only work for us 1 day a week because that's all we've got, and we might reduce your salary, you didn't furlough them. If they're on reduced hours, reduced salary from the 1st of March, then until you actually zero that out, so say you're providing us no service whatsoever on whatever level of salary, they're not furloughed, and therefore the backdating can't be done.
Yeah, okay, that's great. Thanks, Tim. We'll go over to you now, Amy, I think. Can you just outline the actual process of furloughing and how a business makes sure it avoids any sort of claims for unfair sort of discrimination in this whole furloughing process?
Yeah, of course. So the very first thing to look at is your contract. So it might be that in your contract of employment, you have certain clauses that could really help you throughout this situation. So they're usually called layoffs or short-term working. And the specific wording you'd be looking for is something around emergency situations and shortage of work. If you've got either of these, you can essentially enforce furlough with just reasonable notice. We say reasonable is around about a week, but obviously in emergency situations, sometimes that's not possible and you have to do it in a matter of days. But as long as you've got that in the contract, you're good to go. If you haven't got that, if you were to just enforce it, you'd be breaching their contract. So you'd need to either consult with the staff that are affected, or you need to get their consent. Consultation, depending on how many people are affected, could potentially be quite lengthy. So if you've got more than 20 staff, you're looking at 30-day consultation. If you've got more than 100, you're looking at 45. So the best thing to do in the first instance is, if it's the entire business, for example, just ask for volunteers. Those people, there might be some people that could actually really benefit from being furloughed, those that have got childcare problems now and all sorts. So ask for volunteers in the first instance, and then the second, get consent. So if you were to speak to your employees, be really communicative, and you mentioned it at the beginning, Esther, about transparency, and be really transparent with them and let them know the situation you're in. We're finding that employees are actually quite agreeable to being furloughed and taking that 20% hit on pay. So getting that consent, and then those people that maybe have concerns still, you can speak to them on an individual basis. And at that point, once you've got your volunteers and the ones that have already consented, your pool of people that don't want to do it is much smaller, and then the consultation period can be a lot quicker. Great.
We've had a question come in here around redundancies whilst on furlough, because, I mean, realistically, we're likely to come out of this into a deep recession, so the need for the numbers of employees may well be reduced when this sort of starts to get back to some normality. So can you make somebody redundant whilst they're on furlough?
Yes, you can. So if you can already tell as of today that it's probably not going to get better after the 31st of May, you can start those consultations. You can consult while someone's on furlough. That wouldn't be considered work, so that's absolutely fine. But the minute that you give notice of redundancy, you'd need to unfurlough them and then pay them their notice period. So they need to get their notice period on 100% salary, and obviously the redundancy payment. And also it's a job retention scheme. So once you know that there's a redundancy situation, then obviously you'd need to unfurlough them. But you can do it while they're on furlough.
Thank you. And there's a lot of questions as well, I know we've had before, and one again this afternoon around holiday allowances. What happens to those whilst people are on furlough?
So the furlough guidance really helpfully is not explicit about holiday at all. So essentially furlough is an extension of the layoff regulations. So without the furlough being an option, all the options available to employers would have been redundancy or layoffs or short-term working. Now, under layoffs, if you have a workless day, you cannot take holiday on those days. So we're just saying, without the guidance being explicit, follow the layoff regulations. So essentially every day that someone's on furlough is a workless day, and therefore they can't take holiday during that period.
Okay. And in terms of this whole sort of top up, are we obliged to top people up, or is that really at the discretion of the employer?
It's just at the discretion. You don't have to. A lot of the the companies that I'm talking to are doing it. The only thing I would say is if you're not furloughing the entire business and you're only doing a selection of employees, furloughing them on 100% pay could potentially demotivate the ones that are still working. So it's just a balance, isn't it? It's just kind of thinking about how it will affect your entire workforce. But you can top it up, not necessarily even to 100%. You might just top up to 90 or what you want to do, but it's not mandatory.
Sure. And just to be clear, I think if people have started after the 28th of February, they're not eligible for furlough, are they, at all?
No, so before we were saying if they'd started after the 28th of February, but before the announcement was made, get all of the documentation up to date, because it might be that they kind of tighten it after the fact. But it's not looking likely now. So unfortunately, if they've started after the 28th, you probably can't furlough them. I mean, Tim mentioned earlier, you can actually furlough anyone, you just wouldn't be able to get the grant for that part of their salary. So you could potentially keep them on and have them not working, but you wouldn't be able to claim it back.
Yeah. And what if the business has already laid people off ahead of the announcement about the furlough scheme? Can they rehire them and then furlough them?
Yes, they can. So if someone was still on the payroll as of the 28th of February, you can re-employ them and furlough them and backdate it. If the P45 has already been released, we're a bit unsure at the moment about how that will be affected, because there'll be an actual break in service. And I think we're going to have to wait until the portal goes live to see how that will come about. But yeah, at the moment, as long as the P45 hasn't been released, you can re-employ and furlough.
Great. And a question that's come in here around, is there any reason that you couldn't proceed with planned hirings, i.e. new employees coming on board whilst you've got other employees on furlough?
No reason at all. You can just carry on as the business needs.
Okay. And what about people off sick or on maternity leave? How does furlough sort of apply to them?
If they're on long-term sick, they stay on long-term sick. You don't need to furlough them. If they're on short-term sick or they're self-isolating, you can furlough them from the date they return. So if they're self-isolating for the 14 days, from the 15th day, you can furlough them, but you wouldn't be able to do it up until that point. Maternity leave itself isn't affected because you need to change their status of work to furlough someone, and while they're on maternity leave you can't do that. But if you enhance your maternity pay, you can make that part of your claim, so you can claim for 80% of the enhancement.
Okay. And what about, again, coming back to this, what can people do whilst they're on furlough? Can they do voluntary work, but can they do other paid work? They can. So the guidance at the moment just says they can be furloughed from one employer and still work for another. So, I mean, it kind of lends itself to saying that it's if you've already got employment elsewhere or you already have two jobs, but it's not explicit. So really at the moment, if you wanted to go and get a second job while you're being furloughed, there's nothing stopping you. Obviously, you need to look at your contract of employment. You might have a conflict of interest clause, and if you find work elsewhere, then you could potentially be in breach of contract with your employer. But at the moment, there's nothing to say you can't do it. Yeah. Okay, that's great. And once the business has put a number of people on initial furlough, they can add additional people to the next claim, can't they? It's not a sort of a one chance. No, so you can make a new claim every 3 weeks. Super. So, yeah. So, and you can put people back on furlough once they've already come back to the business as well. So, great. Okay, Tim, I think coming back to you then, just sort of moving away from furlough, obviously that's covering employees. Now, what about self-employed people and freelancers, obviously, which this industry uses a huge amount of? We have a package for them now, don't we? Well, not we, the government.
We're definitely not taking responsibility for this one because it's it doesn't really tick any of the boxes that we need it to. So firstly, let's start with what it does. So we've got a furloughed scheme for employees, and we've got what's called the self-employment income support scheme for self-employed people. Now, Esther, when you and I think about self-employed people or freelancers, whatever we want to call them, we include in that basket of people individuals who provide their own services through their own limited company, because in this industry I've been giving advice for many years to clients, say, well, try not to engage with individuals on a self-employed basis, try and engage with them through a company. And the reason we would give that advice to our clients is if they engage an individual on a personal basis, the client bears the PAYE risk if that decision is wrong, if we've engaged them as self-employed but the taxman disagrees. So that's partly why the off-payroll working rules were introduced, because there was a whole load of perceived PAYE not being collected. So let's start with those individuals who provide their services through their own limited company. Typically, they would be the director and shareholder of that company, and they would take a small salary, about £8,000 or £9,000, and then take everything else out as dividend. And that is true across all of the personal service companies across the country, which I estimate are being about 400,000. Those individuals are completely left out in the cold. There is no scheme that meaningfully helps them. They can be furloughed, but they'll get back 80% of their salary, the 8,000 quid they're taking out, which isn't going to put much food on the table. But there's no support for their dividends, and they're not self-employed for the purpose of the self-employed income support scheme. There's a fair amount of lobbying on this point to say, look, you know, it's one thing looking after your genuine self-employed people, probably your jobbing builder or whatever it might be. But you know, most of the people who are working in this sector, at least, aren't self-employed in that sense. So they're not helped. Equally, I've had this question a few times. I'll just mention it in case it comes up. If you're a buy-to-let landlord, you're also not self-employed, so this scheme won't help you on any missed rents. So who is self-employed? Self-employed is somebody carrying on a trade in their own name, such that when they complete their tax return, they declare self-employment income or self-employment profits on that tax return. If they filed a 2018-19 tax return, which would have been due back in January this year, and that included some self-employment income, that they're possibly into this scheme. And this scheme says it will pay out the minimum of either 80% of their trading profits on average over the last 3 years, or £2,500 a month. So you can see this scheme sounds similar to the furloughing scheme because it's 80% or £2,500 a month. It's running for the same period from the 1st of March to the 31st of May. So somebody whose trading profits exceed the 80%, or the 80% of the trading profits exceed 2,500, they're going to get £7,500 as a lump sum, probably late June, early July. There are quite a few hoops to jump through. Firstly, if your trading profits either in 2018-19 or on average over the 3 years aren't lower than 50,000, so they need to be lower than 50,000 either in the 18-19 year or on average, you're completely excluded from the scheme. It's only for those self-employed people with low trading profits. And if you've got a self-employment and other income on the side, so for example, you might have some of your work might be in an employed capacity, some of it might be in a self-employed capacity, your self-employed income must represent at least half of your total income. So if it's just a bit of self-employed income on the side, that won't get you into the scheme. The revenue already know who qualifies for this scheme. It's all the details they need are already in their supercomputer, and they'll be inviting people to apply probably late June, and the money will flow, I would say, late June, early July. This scheme is different from the furloughing scheme in so much as if you're furloughed, you can't do any work whatsoever as an employee. Under the self-employed scheme, you can carry on business as usual. So there's no need to change the actual way in which you carry on your business. So, you know, in one sense, it's more generous. On the other sense, it's less generous because of all the hoops you have to jump through to qualify.
Tim, just going back to furloughing briefly, and the questions come in, which is a good question actually, because I think it's something that we have recently been discussing, is the impact on EMI schemes if employees that have got EMI options have been furloughed. Good question.
Well, I mean, strictly, if somebody is furloughed, that is a disqualifying condition under the option, and the option becomes a non-qualifying option, and there are pretty disastrous consequences. This point has been raised by us and a number of other practitioners to government, and frankly, it's ripe for a concession to be announced. It hasn't been announced yet. There are other concessions around sort of similar type matters where, through no fault of the employee or the employer, a technical condition of the option scheme has failed. So it's if you can avoid it, I wouldn't furlough your EMI employees, and frankly, your EMI shareholding employees or your EMI option holder employees probably are your more key employees in the business. So hopefully they're not the front of the queue to be furloughed anyway. But if you are furloughing, you just do so in the knowledge that the options could become non-qualifying, which have fairly disastrous tax consequences. I know that if there isn't a concession announced and I do due diligence on targets for my clients, if this point comes up, I'll make a bit of a meal of it. I will raise it as a big due diligence risk if I'm acting for the purchaser, even though in my heart of hearts I probably know that the government will be unlikely to take the point, but it's going to come up on due diligences in the future unless there's a formal concession announced.
Yeah, sure. Well, let's hope they do formally announce a concession. Otherwise, I think it leaves people a bit confused as to what they should do. Thanks, Tim. I think we'll bring Paul in now to talk a little bit about the coronavirus business interruption loan scheme. Now, there's a lot in the press, Paul, about businesses having real trouble accessing this scheme. Is this true, or is this just the press stoking things up?
Afternoon, everyone. Just want to check. Can you hear me first of
all?
Yeah, great. Yes, so absolutely. This was the first scheme that was announced, and it's probably the most controversial one. People are having real difficulty accessing money and sort of sticking up to the banks as well. They're having difficulty with the rules that have been put in place, both in terms of the scheme and also other rules that have been put in place by the European Union previously. There has been increasing amounts in the media, and there has been a bit of movement, but I still think that the controversy is going to continue. Firstly, I think I'll just give a bit of background for those of you that haven't come across the scheme or just wanted a bit more information about it. So the civil scheme is for businesses with turnover of up to 45 million. It was initially launched in the budget, and it was aimed at encouraging banks to lend to small and medium-sized businesses. The two key points that underpin the scheme are that the borrower remains 100% liable for the debt, regardless of the government underwriting 80%. And also, secondly, that the business must have been a viable one prior to the crisis. Therefore, if you wouldn't have been able to borrow prior to the crisis or have no realistic prospect of repaying in the future, then this is unlikely to be suitable for you. I think currently what we're hearing from banks is that they're inundated with inquiries. I think in the press there's a stat out there that there's been 130,000 inquiries, but only 3,000 successful applications so far, with a total facility amount of £90 million. I think the stat that really puts that into perspective is there's a similar scheme in the US, and at the moment they've approved $38 billion worth of facilities. So clearly something isn't quite right. Conversations I'm having with banks are that it's constantly evolving. Then that's partly being driven by the media and by people not being by businesses not actually being able to access the funds. At the end of last week, you may have seen that the schemes did change slightly. The two main changes were the rules were relaxed slightly. So previously, you had to for you to be eligible for one of these loans, you had to have no other commercial lending options available to you. That's now been relaxed, so you don't have to have tried and failed to apply for a different loan. Secondly, the personal guarantee rules have been relaxed slightly as well. So now there can be no personal guarantees up to 250,000. My view is I still don't think that this is going to enable many more businesses to be able to borrow. So I think the controversy will continue, and I think for businesses who are sort of considering their options, I think this is maybe the second or third option. Furloughing and the other schemes that Tim's been talking about are far better ones at the moment to be pursuing to help you in this time.
I mean, in terms of this sort of, banks being told not to take or ask for PGs on the 250,000, I mean, are banks sticking to that?
Yeah, it's part of the scheme rules. So up to 250,000, they're not allowed to take personal guarantees. Above that, it's very much at the discretion of the lender. Some banks aren't requiring personal guarantees at all for any amount, but that may in itself may mean that the bank is therefore unable to lend as it makes the lend more risky. In terms of the way that the personal guarantee works, is it's only on the 20% that isn't underwritten by the government. So if you can't pay for the loan and you have signed up to personal guarantees, then it will only be on the 20% and not on the whole amount, and that'll be after the recovery of any other business assets.
Yeah, thanks, Paul. And what sort of information are businesses going to have to provide to the banks to demonstrate that they are eligible for one of these loans? What sort of, how much detail?
Okay, so the two things that you're trying to prove is firstly that you were a viable business prior to the crisis. So therefore, I'd expect you should expect to have to provide historic accounts. It does depend on your business, but we normally say between 2 and 3 years of historic information, and also management accounts up until the end of February. So the period between the end of between your latest statutory accounts and the management accounts date. Additionally, then you'll be asked for forward-looking information to prove that you or to show that you do hope to be able to repay it in the future. So initially, you'll be asked to produce a 13-week forward-looking cash flow forecast to just and that's a document that probably is worth everybody doing at this time, so that and using that as a tool to plan how to plan and make business decisions, and that should be done on a rolling basis. And going forward, depending on the size of the lend, some banks are asking for a longer forecast going into the future, to show that once the crisis is over, you will be able to repay the debt.
Sure, thanks, Paul. There's a question coming here around the capital repayments. Somebody's got an agreement that they don't have to start repaying their capital until 6 months in, and they've been told that they can apply to defer that further after 6 months.
Yeah, that's the case. So in terms of capital repayments, generally it is slightly on a bank by bank basis. I think the first 6 months are generally capital repayment free. The next 6, it does depend. Some banks are saying that you don't have to make capital repayments until after 12 months.
So can you just repeat the period looking ahead which you need to forecast to be qualifying for these loans? Somebody's just asked for clarification. I think they missed it.
So initially, a 13-week cash flow, we'd expect it to be, you need that for all of them, and then probably going forward, you'd be asked for a 12 or 24-month forward-looking forecast as well. But that would depend on the nature of the business and how much you're looking to borrow. Sure. There's no sort of hard and fast rule for that.
And are these loans done on an individual company basis, or do they have to, or can you apply for them on a group wide basis? What if you've got a small company part of a large group, and the large group is quite profitable and doing okay, but one individual company isn't?
Again, that would vary. So a lot of it would depend on what could be what security there is available in the group, and where, if there are any assets to be able to be used as security. If we're talking about a UK group and a profitable UK group, then I'd expect that they will look at the group as a whole, so that they can assess the risk of it. The best advice would be to speak to your relationship manager or director, just because they will be able to advise best what the most suitable options are for you in that scenario.
Lovely, thanks, Paul. Amy, I think we'll bring you back in. We've had some more specific questions come in from our participants. So if we make employees redundant during the furlough period and pay them full pay for their notice period, can we still claim relief for the time they were furloughed?
Yes, up until the day that you gave them notice of redundancy. So for the period of consultation you can, and for anything before that you can, but at the point that you actually physically make them redundant, you'll need to take them off of furlough.
Yeah, okay, thank you. And somebody else has asked, what if you've terminated an employee in December and paid notice until the end of March, and then that employee says, well, actually, can I be reinstated and furloughed? Is that allowed? I mean, the person's made the point that the guidance seems to suggest you can, but it doesn't sort of feel quite in the spirit of things.
No, well, I guess if they was on the payroll as of the 28th of February, technically it would be allowed, but I don't know if they was ever to be audited after the fact, if it was then there would be an issue at that point.
Yeah, that sounds to me like that is one where it's a bit questionable, so you're opening yourself up to challenge around that particular case. So more generally speaking then, Amy, I mean, what if obviously we can put people on furlough, but what if we've got lots of work that we need doing, but we can't actually afford to pay people their full salary for doing that work? I mean, you know, I've got lots of my clients who have implemented pay cuts and short-time working hours, but presumably we have to be careful around how we go about doing this in terms of, again, you know, claims coming back from employees on it.
Yeah, so the process is exactly the same as if you were furloughing them. So look for those clauses in your contracts for reducing their working week and obviously their pay accordingly. And if you don't, again, you need to get their consent or you need to consult with them. So follow exactly the same steps as you would have done with furlough. With pay cuts, if you still need them to work full time, but you want to reduce their salary, it's slightly different. So you just need to get their consent for that, and you wouldn't really be able to implement it any other way. But we are seeing that actually people are a lot more agreeable to these things than they ever usually would be. I mean, it sounds so alien to ask someone to take a reduction in pay and they agree to it, but at this current time, a lot of people are. So it's just about communicating.
And if employers know sort of that realistically they're likely to need to make redundancies at the end of this, you know, how do they go about this process? And we've talked a bit about, I think Tim alluded to this sort of 18th of April date and its importance. Can you just remind people why that date is so important?
Yeah, so if you've got more than 100 staff that would be at risk of redundancy, you need to consult for a period of 45 days as a minimum. So from the day you put the first person at risk, you can't make a single dismissal until that 45-day period has been and gone. So that's why that 45 days takes you from the 18th of April to the 31st of May. So if you want your full consultation period to be covered within the furlough, that's when you'd need to do it. Obviously, consultation, that 45 days is the minimum, so it could easily extend beyond that, depending on the queries and what you get from the employees and any alternatives that they propose. But yeah, ultimately you'd need to do a redundancy consultation, but that period of time depends on how many people are actually at risk.
Okay, so that's just for if you're making 100 people or more redundant, which hopefully for the bulk of our clients wouldn't be the case. What if you're making much fewer people redundant? What does that do to the lead time?
So anyone between 20 and 99 is a 30-day consultation period, and if there's less than 20, it's just whatever's reasonable.
Okay.
So we say around about 2 weeks.
Yeah. Question coming. I think we did cover this, but again, can you make somebody redundant whilst they're on furlough?
Yes.
Yes. You can. Yeah. Okay. And what if somebody's been furloughed for a certain period of time? Can they ask to be made redundant? Can they sort of insist upon it?
No, so the short-term working regulations, or layoffs, if you've been laid off or you've had your working week reduced for 4 consecutive weeks, an employee can resign and they can then claim their redundancy payment. That's not been extended to furloughing, and we think that's because obviously it's a job retention scheme. So ideally the government want people to remain in employment, so that hasn't been extended at that point. So if people resign, they just resign, they don't make a claim for any redundancy.
Okay. And somebody's asked a question around, you know, the broad average of what agencies are implementing in terms of salary cuts and whether 20% is a broad average. I think it varies from agency to agency, but I think 20% seems to be a fairly popular starting point. And I think what some I know what some of my clients have done is they have sort of implemented some sort of tiered system whereby people under a certain salary level, maybe sort of starting at 35,000, aren't taking any pay cuts at all or taking a very negligible pay cut. and then it sort of ramps up the more people are earning. Amy, is that your experience?
Yeah, I mean, I've had some take up to 50% pay cuts, but yeah, 20% seems to be the average. And I don't know if that's because of the whole furlough situation at the moment. It's just that figure that tends to stick in your mind, isn't it? But yeah, 20% seems to be quite common at the moment. Yeah. Obviously, it's important to remember that if you're still working full time, make sure that 20% doesn't take you below minimum wage. You'll need to make sure that if that is the case, you've reduced their working week at the same time.
Yeah, okay. And what can we do around people's holiday entitlement, Amy?
So there's a couple of options. You can either force people to take a certain percentage of their annual entitlement over the next few months, or you can have a no cancellation policy. So if people have already got booked holidays over the next 3 months, and obviously they unfortunately can't go anywhere now, you can say that those holidays can't be cancelled. There's also been an announcement recently last week around holiday carryover. So if someone can't take their holiday towards the end of the year because of coronavirus, I mean, you might have had a lot of sickness at the beginning, then you might have furloughed some of your employees, and within that first 6 months of the year, perhaps your employees haven't been able to take their holiday. So you're looking at coming back in July, August time, and you've got your entire workforce with a full year's holiday entitlement. So the announcement that was made is that you can carry over holiday for the next 2 holiday years. So it just gives employers a bit of breathing space that if you need your staff in, because hopefully by the end of the year we're going to be busy again, and you can't accommodate all of those holiday requests, it just gives you an option to let people carry it over.
Sure.
Or you can force holiday. So you can actually give notice for people to take their holiday. It just needs to be double the amount of days that you're asking them to take.
Okay. And one specific question that's come in a little while ago actually was around parents who are juggling homeschooling with working. And on the one hand, it feels unfair to make them work a full 40-hour week when they're trying to do 2 jobs. On the other hand, it feels unfair on those who are able to work their full 40-hour week that don't have children if you let the others off the hook. I mean, how do businesses manage that? And actually, perhaps I think another question that we have answered previously is around, is the inability to work because you've got to look after children a valid reason for furloughing?
Yeah, so that was announced at the weekend. So if someone does have childcare issues, obviously schools are closed, childcare providers are closed, so exactly as you say, there might be issues there. That is now a case for furloughing. So before it was only if the business doesn't have work for you, but now if there's potentially work for you, but you can't physically do it because you're looking after children or just caring for anyone, so it might be caring for your parents or whatever, that is now a case for furloughing as well. But it's the employer's choice, so they don't have to do that at all. And in terms of kind of what you can do for those parents that are kind of juggling it, it's just about being flexible if you can. I mean, in the nicest possible way, it's not your problem as an employer. They have contracted, they've got 40 hours that they're contracted to work, and they have to manage that. I mean, Esther, you met my 10-month-old on a conference call the other day because of this exact problem. But it's not work's issue to deal with my childcare. So if you can be flexible, that would be amazing. It might be that you can maybe work extra hours in the evening and have a couple of hours off in the afternoon, or you come to a compromise and you reduce those hours, and in turn you'll pay as well. It's just about communication. Work with the parents, see what works for them and what works for you, but you're under no obligation to do anything specific.
Thank you, Amy. Now, I'm conscious that we're sort of at our build time. We have had quite a few questions come in, so we are running a little bit over. I expect it'll be another 10 minutes or so if people are happy to bear with us. Tim, a specific question's come in here, really good question actually. Is employee home working tax deductible, so light, heat, internet and things like that if they're furloughed, not if they're furloughed, if they're working from home?
Yeah, really good question. I think the guidance which has come out on this has been pretty inconsistent, and my toes curled as I watched that program on the telly. I can't remember the name of the chap who does the money advice, where he seemed to get absolutely every fact he gave wrong, and that set the newspapers off repeating them all. So the guidance out there is not good. The £6 a week, which is the figure that people are latching on to. So if an employee chooses to work at home, so is not required to work at home by their employer, but chooses to work at home in normal circumstances, the employer can pay them £6 a week, which is towards their incremental cost of heat and light of working at home. And the employee doesn't need to provide any bills or receipts or anything like that. £6 a week isn't very generous. If an employee thinks that they're spending more, then they can provide evidence of more. And if the employer chooses to refund that, then that's all tax-free. I think what's been indicated is that £6 a week can be claimed as tax deductible by the employee, which is only the case when the employee is necessary for the employee to work at home. Well, I think it's probably reasonable to say that during the period of self-isolation, it is necessary for individuals to work at home, but the revenue have been silent on this. Frankly, if employees want to put in a claim via a form P87 for £6 a week to cover their heat and light, and that will get them back a few pounds a week of tax relief, I suspect the revenue aren't going to challenge it. But the £6 a week is generally intended to be a reimbursement by the employer, not a claim made by the employee. In terms of buying things, I mean, we as a firm have had employees, tell us things like, quite reasonably, they don't have a desk. They live in a one-bedroom flat and they don't have a desk to work at. So we had, hilarious pictures of people setting up their laptops and ironing boards and things. But so if an employer chooses to provide a desk to their employees, the way to do it is for the employer to buy the desk and for it to remain the property of the employer, and to make that desk available to the employee in their home. That then is a tax-exempt way of dealing with it. If the employer reimburses the employee for a desk they've bought themselves and the desk remains the property of the employee, I think we might find the revenue would come along and try and tax that later. So it may feel overly subtle, but the desk ought to be bought by the employer, or if the employees bought it themselves already, the employer probably ought to buy it off the employee, so it's the property of the employer and made available to the employee rather than becoming the employee's property. If the employee wants to buy a second-hand desk off their employer in years to come for pittance, that's fine, but the second-hand value of these assets probably makes the tax a lot less troubling.
Thanks,
we do have up, rather than go through all the rules that are a bit fiddly, we do on the Coronavirus Hub, there is a whole document I wrote at the very beginning on all the tax relief for home working, and that includes the absolute golden gem of people getting refunds on their season tickets. So those who've not already explored that, your employee base who've got an annual season ticket, go off and get the refund for the bit you're not using, and that's covered in that document too.
Sure. And while we've got you, Tim, just quickly on grants around business rates. I don't think there's anything that's come in that's particularly relevant to this sector as yet, is there?
No, I mean, let's just discount for the moment the leisure, hospitality and retail stuff. That's actually quite generous, and there are calls for actually making them less generous, as bits of retail are actually doing very well in supermarkets at least. So forget that for a moment. We'll assume that's not relevant to anyone on the call. The only other bit that's relevant is for businesses that qualify for small business rates relief. So that's where you're trading out of a property with a rateable value of less than £15,000. The rateable values are completely illogical. If you don't know what your rateable value is, put into Google, check my rateable value. You might want to put .gov.uk in there just so you get to the right website, but there is a government website where you put your postcode in, select the property from the list, and it tells you what your rateable value is. If your rateable value is £15,000 or lower, you've got a grant of £10,000 coming your way from local government. Local government the local authorities are being pretty slow at dealing with that, but that grant is on its way. Whether it will arrive this month or next month, we don't know, but that's intended to be those businesses operating out of business premises with a rateable value of less than 15,000.
Sure. And I know some of my clients have been able to agree specifically with their councils that they missed their April and May payments and instead carry on paying next January and February when they would have had their 2 free months. And others actually have just been told to cancel their direct debits on the basis that they're not in a position to agree deferments, but neither are they in a position to do any debt collection at the minute. And similarly on rent, I mean, I think people need to be making sure they're talking to their landlords. Clients are having varying degrees of success in terms of either agreeing rent reductions for the period, which is less the case, to be honest, and more the case agreeing some rent deferments. But again, at least we've got the protection that's come in around, well, both commercial tenants and non-commercial tenants in terms of not being able to be evicted during this challenging time. Ian, that's probably a good time to bring you in. Last but not least, insolvency, which hopefully won't be the case for many of our clients. But I mean, we've had some temporary suspensions in the wrongful trading laws, haven't we? And what does this actually mean for our clients and directors who might be worried that they're breaching these rules?
I think the intention of the government to relax these wrongful trading laws is very welcome, and I think a lot of directors will be breathing a sigh of relief. What these wrongful trading rules entailed was basically directors inheriting potentially personal liability for extending the company's creditors at a time when they ought to have known that the company was insolvent. So by relaxing those rules, it gives directors a bit of breathing space to continue trading when they probably did know they were insolvent. Now, most companies who are facing problems at the moment will be cash flow insolvent, even if they're not balance sheet insolvent, because it's quite likely they're getting less money from their customers in when they should be perhaps getting better recoveries from their debtors. Some are maybe slow, some may be going bust. So it'd be difficult to get monies in from debtors, and no doubt ongoing trading may well reduce or perhaps be extinguished altogether, whilst fixed costs being fixed are difficult to shift. So one assumes that cash flow is going to get tighter and tighter, and the longer this goes on, even the most robust of companies might find themselves cash flow insolvent. And if you're cash flow insolvent, you are insolvent, and under the rules, you have to make sure that you are acting in the best interest of your creditors. Now, whilst the wrongful trading laws have been relaxed, most actions against directors are probably not on wrongful trading. They're about general misfeasance, they're about preferring one credit to another, they're about selling assets below market value. So from that perspective, I think directors need to be taking advice, because this is very difficult times. Directors, even very good managers, are not facing circumstances that they've ever faced before, and getting advice, even if you don't end up with a perfect solution going forward, and no one has a crystal ball, no one knows when this is going to finish, is going to be better than just plodding on and not actually taking any advice and just assuming that you know best, because it's muddy waters, and directors need to be obviously looking after the company, and very much so looking after the creditors. They've also got to look after themselves, and the threat of some personal liability, they shouldn't take it too lightly. And you read the headlines about wrongful trading and it being relaxed, it's not all that it seems to be, and so directors need to be as careful as ever to make sure that they're doing the right thing and mitigating that risk.
I mean, should the relaxation in these rules make agencies more nervous about giving people credit?
Yeah, I mean, I think you've got to be very careful. Wrongful trading is all about increasing your credit. When you're giving clients credit, you don't know whether you're ever going to get paid. Obviously, if you can work on a retainer and get some money up front, all the better. It's a difficult one, because more and more your clients will need extra credit, and there's a lot of trust, a relationship there between the self and the client, and also between the self and suppliers, to make sure that you get the balance about right. But in these circumstances, people look after number one, and I think you've got to look at your own cash flow and make sure that you're getting as much money in as quickly as possible, and paying your suppliers as slowly as possible.
Yeah. So, we've got a question coming here. I don't know whether you'll know the answer to this, Ian, but somebody's asked if their tenant was already behind on their rent for the period before the coronavirus crisis, can they be evicted, or are they still protected?
Well, I think it's quite difficult to do any evictions at the moment, because the social distancing rules are stopping bailiffs and other people coming in and actually attending premises. So I think there are practical issues. I think in theory, if they are, certainly the courts are still up and running, particularly in London. Some of the local courts elsewhere are a bit behind, but London's very much up and running, and you can petition, you can wind up companies at the moment, and it's mostly online, and surprise, surprise, some of the 70 plus age judges are getting the hang of video messaging, and video. So we're getting video litigation quite a lot now, and it's amazing what they can learn when they have to. So you know, you can take action to recover debt, but obviously there are certain practicalities, like we're hearing in the property market. You can exchange, but you can't complete. And I think that's going to be a lot of the issues. You might be able to get the relevant litigation in place, but you won't physically be able to go and get the eviction. And you know, it may not be in the landlord's interest to go after and evict their tenants because there's no one else necessarily to replace them. Then you've got to take on a rates liability. You're better off to try and negotiate something with your ongoing tenant, I would say, in most cases. So don't look at it just from a short-term basis. Any cash in, even if it's half the rent or a quarter of the rent or monthly instalments, is better than getting nothing at all, and indeed worse than that, going and spending money on lawyers. Lawyers don't come cheap.
Somebody's asked, would it be wise to try and change payment terms for new work, or will that upset clients? I mean, I think almost you've got to assess this on a case-by-case basis. I was going to say, I mean, we all want to come out of this with clients and have strengthened our relationships with them, not weakened them. So I don't think it's a one-size-fits-all, is it?
No, it's not. And, you know, again, you've got to manage your cash flow. We talked about 13-week cash flows for going off and getting business interruption loan scheme, you know, loans. But actually, you know, how do you do a 13-week cash flow at the moment? No one knows when your debtors are coming in. No one knows whether when you're going to get your furloughing money back in. So it's very difficult to judge your cash flow. So I would say that, you know, everyone on its own merits needs to start negotiating with your suppliers and your clients. So don't look at it just one way. Don't look at it like, oh, I've got to come up with some sensible arrangement with my clients so they pay me on a bit-by-bit basis. And yes, you may be setting some sort of precedent for the future, but hopefully if you've got a good relationship with those clients, they will understand that these are exceptional times and you're taking exceptional steps. But you must remember to start negotiating downwards as well with your suppliers. They will accept, you know, certainly we've talked about HMRC, they're going to accept time to pay, but so will your other main key suppliers. You know, you pay them, you may not be able to pay them now.
That's great. Thanks, Ian. I think we'll draw it to a close there. We've answered all the specific questions and covered all the key areas that we wanted to cover. Thank you to all those who've stayed with us for the extra time, which I think is most people actually. Any further questions, please do follow them up with your usual MKS partner. And as Tim mentioned earlier, we do have a coronavirus hub on our website, www.moreks.co.uk. If you go to that, for you on the homepage, in big bold lights for you on the homepage. There's lots of really useful, and so I think I'll sign off. Take care and stay safe.